I don't even know what to make of the story, but the Fed can't stop tinkering, can they?
It's funny that you call a tinkering story the story of the day. So let me give you some important context. We had a story today about some tactical decisions that the Fed is kind of thinking through. We reported on Monday that the Fed is pausing its efforts to stimulate the economy with these bond buying programs. We reported again today that they're not likely to act next week. And that whether they do more to get the economy going depends on how the economy performs in the next few months. Having said that, they are thinking through a tactical question. If they decide to do more, capital I, capital F, if they decide to do more, how would they go about doing it? How would they go about buying more bonds? And what we try to do in our story today is to explain some of the different strategies that they could use to launch another bond buying program if capital I, capital F, they decide to go about doing it.
Now, John, I would strongly suggest to our viewers out there to please read your piece, because you go through the various alternative. One is quantitative easing. Again, I don't want to go through all this because our viewers will probably turn off their computers or their TVs if they're watching. So the first is quantitative easing. The second is Operation Twist. And the third, which you raise, is some form of what we call sterilized bond purchases.
Right, so that's the new facet here. The Fed has done a lot of quantitative easing. They're very experienced at it at this point, trillions of dollars worth. They've already done this thing called Operation Twist, where they sell short-term treasuries and buy long-term securities. The new idea on the table is that the Fed could, in theory, go out and buy a bunch more bonds if it wants to. In the process, it would be pumping a lot of money into the financial system. People get very worried when the Fed pumps money into the financial system. They think that they're going to cause inflation. The Fed could effectively lock that up. They have tools that they've developed in the last few years to lock up the money that they put into the financial system. This gets technical. Instruments called reverse repos.
John, don't go there. I'm begging you. Don't go there.
But the idea is that they would try to get long-term interest rates down without actually pumping a lot of new money into the financial system. That's the third option. And they're looking at it. They're not sure. They're not sure to do either that or anything. They might decide over the next few months that, you know what, this economy is going off okay on its own, and we're done. They could very well go down that road too.
Now, John, I want to make it clear to our viewers, the reason why this is significant is because the markets look very carefully at what the Fed says, and they look very carefully at what Jon Hilsenrath has to say about what the Fed has to say. And the markets did turn up shortly after you broke your story earlier today. The dollar weakened on the back of that because people in the bond markets and in the stock market interpreted it, rightly or wrongly, as a signal that QE3 or that some form of further easing was still on the table, and the Fed was not happy that Bernanke's comments last week were interpreted as being, well, there's no QE3.
Right. All right, so Evan, what I would suggest is that rather than interpret the story, people should read it, because it says very clearly it's not certain that they're going to go out and do another bond buying program. This is exactly what we said on Monday. It depends on how the economy performs. It's really, and this matters to the market too, the tactical issues matter to the market. Some Fed officials think it matters more to the market than it should. But whether they do a twist program or a straight bond buying program with no effort to kind of rein this money in could affect different markets in different ways. If the market thinks that the Fed is going to cause a lot of inflation, commodity prices go way up. If they try to do something to alter that expectation, such as another twist program or this sterilization, maybe commodity prices don't go up, maybe stock prices don't go up as much as they otherwise would. So this story matters to the market. It should matter to the market, but it should matter to the market because people will have a better understanding of the tactics that the Fed's considering, not because it's any kind of signal or smoke screen that's being set up.
I understand that, John, but as a bit of an outside observer, I look at these things, and I looked at your piece, which I thought was very well written, very, very clear, and I say to myself, does the Fed, when a story like this comes out, it gets across the mindset that the Fed thinks that they can control things almost down to trying to avoid both either the excessive consequences of any policy. And
So Evan,
it smells.
Evan,
let me just finish.
this is not about the Fed trying to control something in terms of messaging. This is about a reporter trying to figure out what the Fed is up to.
Right.
That's what it's about.
No, I understand. I understand. But still, this is a very activist Fed. This is not a Fed who's going to sit back and say, well, let's just leave things as they are and we'll see how they turn out. This is a Fed that believes that it has a lot of tools to fine-tune monetary policy, right or wrong.
Absolutely. Ben Bernanke, the worldview that he brought into this job in 2006 was that the Bank of Japan in the 1990s and 2000s and the Fed in the 1930s were too careful, too cautious, too afraid to try untested strategies for dealing with really bad economic environments, and that they made the economies in those settings worse, and that he wasn't going to repeat those mistakes. And that remains the mindset of the Fed chairman today, that he's going to do, in his mind, what he thinks he can to get the economy out of a very bad place, and at the same time try not to let inflation get out of control. I've been getting emails all morning and afternoon. A lot of people think he's going to mess up and that he already has, and that he is going to let inflation get out of control and that the dollar will weaken.
Right.
His mindset is that he's not doing that.
Right.
But he's absolutely an activist.
Right.
There's no doubt about that.
I got to run. Jon Hilsenrath, please check out his excellent piece on the website, WSJ.com, today.